Well, good afternoon, everyone. I'm Jim Rooney, President and CEO of the Greater Boston Chamber of Commerce, and I hope you were all able to have an enjoyable Thanksgiving and a restful long weekend. I want to welcome you to the final Government Affairs Forum of the year. As many of you know, the Government Affairs Forum is a premier event series for the Chamber, featuring prominent elected officials on a normal basis. But today we're joined by two prominent people who will discuss a little bit about the role of government and the business community as we go forward. This year, the Government Affairs Forum started live back in February with Governor Baker, and we quickly converted to a virtual series featuring Speaker Robert DeLeo, Senate President Karen Spilka, Attorney General Healy, Congressman Lynch, and most recently, our new Assistant Speaker of the United States House, Catherine Clark, who we joined last month. We thought we'd do it a little bit differently this time and ask several prominent business leaders to talk about the path forward of our economy, especially in light of a transition in Washington. Before we get started with today's event, I do want to thank Bank of America and Massachusetts President Micheal Chamberlain for the bank's support of this series and generally its support of the Chamber and our activities, not only over the past year, but for many years. Bank of America is a true leader in our community, focusing on the many issues that affect the ability of the business community to succeed, but also our neighborhoods and our communities to grow and get through this crisis moment, focusing on issues like racial equality, housing, hunger, workforce, and especially this year, small business. So thank you, Micheal, for your partnership with the Chamber of Commerce. I also want to thank Comcast for also being a partner in this series. These events are broadcast by Comcast and will be available on demand. And a note for our attendees, these events are taped and will be available on the Chamber's web page, YouTube page in the coming weeks. I want to encourage our listeners to ask questions using the chat feature. And we'll try to get to some of those questions during the course of the program. So with that, I'd like to introduce two very prominent speakers. First, we're joined by Suzanne Clark, the President of the United States Chamber of Commerce. The United States Chamber of Commerce is the largest business federation in the world. And Suzanne is the first female president in the institution's 107-year-old history. And Suzanne, I know from this audience, you're getting a virtual standing ovation for breaking through that glass ceiling. I've gotten a chance to know Suzanne over the past couple of years, and I've found her to be a leader among leaders, especially over the past year, during which the U.S. Chamber pivoted to respond to the multiple levels of crisis that we have faced, providing advocacy, providing information that the business community and local chambers across the country need, and collaborating and coordinating on many levels of response efforts. I do want to give a few shout outs to some of Suzanne's team, Neil Bradley, Sarah Armstrong, just tremendously responsive. And on a regional level, I have to give a shout out to my friends Steve McAllister and Nick Bond for all that they do in support of chambers up here in the Northeast. Suzanne guides the strategic transformation of the Chamber's policies and processes to meet the 21st century, representing businesses of all sizes and industries all across the country and across the world. And what stood out to me in looking at Suzanne's bio is that she remains passionate about the need to create an environment where companies can innovate, grow, and flourish. Suzanne, thank you for joining us today. Joining Suzanne, I'm pleased to introduce our featured speaker, Chairman of the Board and Chief Executive Officer of Bank of America, Brian Moynihan. Brian and Bank of America are no strangers to a Boston audience, of course. Brian leads one of the largest banks in the world and a team of more than 200,000 employees, all dedicated to making financial lives better for people, companies, and investors across our nation and our globe. Brian has a long resume, but Brian, what stood out to me is you personally leading the company's Global Diversity and Inclusion Council, working with public officials, other business leaders, and civic leaders, your participation at the local level in several boards and organizations toward that issue of global diversity and inclusion. So we're thrilled to have both Suzanne and Brian joining us today to talk about the economy, what comes next, especially as we go through a political transition in Washington. And Suzanne, I'm going to kick it over to you, but I want to ask you to answer a two-part question as I do that, a looking back and a looking forward question, if you will. I mentioned the pivot that the U.S. Chamber had to take, as did all of us during this year of crisis. Look back over the past year and talk about that pivot, dealing with the public health crisis, the economic crisis, the racial crisis, in a country so divided. What did you see within your organization and within the business community? And then if you would shift forward, I know that you have the ear of the incoming transition team and many leaders of Congress. What's the U.S. Chamber's priorities as we try to stimulate economic growth and recovery going forward? Suzanne, take it away.
Thank you so much, Jim, and thank you for your leadership. We have been really blessed with your counsel and your wisdom, and we've appreciated your help on a number of our issues this year. I know your members are lucky to have you. They know that because you really understand what a job means to a community, what it means to a family, what it means to an individual, and everything that you're doing in your region to promote that has been terrific. And I know we all appreciate it down in Washington. If you look back, I think what's so interesting is in 2019, we were all having conversations about what's the fundamental purpose of business and what is business good at? And is business doing good simply CSR, or is it intrinsic into the nature of what business does? And then bam, this pandemic hits and business kind of demonstrates what its purpose is, right? We watched manufacturers change on a dime to producing PPE and masks and ventilators. And we watched IT companies pivot to telelearning and telehealth and figure out new ways of doing business. We watched frontline workers take risks to make sure that our communities and our families were still being served. And then, of course, the pharmaceutical companies with their innovations in therapeutics and cures at such warp speed. So it's been really rewarding, I think, to watch the business community step up and serve their employees and customers in such an important way and maintain safety at the same time. So we think we've seen a lot of small, medium, and large businesses show the country that business can do well and do good really at the same time. So looking back, I think that's a number one takeaway for us this year. I think your second question about looking forward, look, we know there are going to be razor thin margins in Washington, no matter what happens in Georgia. And yet we know it's a crucial time to get things done. And it's all part of why the Chamber over the past few years has been working so hard to develop more bipartisan cooperation, more people in the middle who want to govern, who want to get things done. We knew that was urgently needed before the pandemic, and it's even more important now, right? So what are we looking for? What are our priorities? First, second, third, more pandemic relief. I mean, we are really concerned about the small businesses and families that are suffering across our country, and they cannot wait 3 more months for relief. So that's our first several priorities. I think second, we're really looking at infrastructure for several reasons. Number one, it creates jobs, it grows the economy. Number two, well past time to get it done, really important project. And number three, it could help build some governing and bipartisan muscle to get things done as we get this new Congress off to a start. So I will stop there and bring into the conversation Brian, who is certainly a man who knows how to get things done, is certainly a man committed to growing jobs and opportunity in the country. And so, Starting with, I know that Jim gave you an intro, but these are two stats that stood out to me. You've been CEO of Bank of America for 10 years, credited with the transformation not only of that bank, but also the entire banking sector. During your tenure, I wrote this down, assets have grown by more than $500 billion. You've achieved a 72.9% total return for shareholders. And of course, Chief Executive Magazine would name you CEO of the Year for 2020. It's really impressive. But it leads me to this question. So it's been over the course of a decade, you've seen all kinds of crises, and now this pandemic, of course, something no one's ever experienced before. How have you been able to maintain the confidence of both your employees, but also your customers throughout these kind of tumultuous times?
Well, I think we at Bank of America, first of all, I want to thank Jim and Suzanne for hosting us tonight and having a chance to talk to the people out there. And it's terrific. And any accolade I get is my team's accolade. So I don't fancy myself other than running a great team of people. So it's been great. But if you think about how we drive the company, it's about responsible growth. And that has a couple attributes which mean a lot to people inside the company. But think of it as being customer centric, being managing our risk well, and then being sustainable, meaning we've got to be the best place for teammates to work, share our success with society, and we got to drive operational excellence, which gives us permission to do everything. And so as we've run the company, we just stuck to that. So when we had the pandemic hit, we basically ran the company on a customer-centric, employee-centric view, get our employees safe and keep serving our customers. And you mentioned frontline workers, but remember that we were open every day. And we had 20,000 plus people in our branch system. It had to be there every day to help the economy continue, even in the shutdown mode. And those teammates did a fabulous job. And behind them were tens of 190,000 people to help run the company. But again, another 10,000 or so that had to come to work every day to make sure the company could operate in the trading environments and other areas. So we're very proud of what the team did. But we took a customer-centric, teammate-centric view, and that's how we ran the business, for how we decide what benefits we give, from how we decided to help the government distribute the programs, the PPP program and other things, from how we decided how the customer assistance programs we had with 2 million consumers didn't make their payments. We gave them the right not to make their payments. They took us up on it. Those were all things to help people through this very tough healthcare crisis and make sure that we could help as much as we could as a company for our teammates and our customers to ensure it didn't become an economic crisis for them.
It's a wonderful comment that any accolades you get are your team's accolades. And it's clear how passionate you are about that. You've also been passionate about the diversity and inclusion aspect of teams. And so, this has been a year of kind of awakening for a number of people towards those issues, and yet they've long been important to you at the bank. And so how are you doing?
Well, this was a year clearly where we had another crisis that came in, which is around the killing of George Floyd and the Breonna Taylor and beyond, that the awareness of what was going on really had a different impact than it had. There have been other times in American history where the relationships around social justice and racial justice were a front order. 50 years ago in the late 60s and early 70s, it was a major time of change. But this was different, and this was about just the inability for people to function today in today's society, and that really struck people. So we had to first make sure our teammates felt that what we always believe, that we believe in diversity and inclusion. That is not only diversity, which is representation, but inclusion is how you feel. We believe that our company has to have our teammates have the conversations that can go on and talk about tough issues that go on outside our company. And so we basically developed a 3-part response. One was denouncing racism in many ways. The second was a $1 billion program to help on social and racial justice issues that we developed. We actually had in process, based on some studies in economic mobility we've been working on already, and with Raj Chetty and John Friedman and others, that we were working on ideas to help how we could help in that manner. That was going along, and then you had obviously the George Floyd killing and the awareness, and we brought the program out for $1 billion program around health, housing, education, and jobs, and then entrepreneurship. And then the other element we focused in on was to give a gift to Smithsonian, develop a courageous conversation platform to help them develop that on a nationwide basis across all their platforms. Lonnie Bunch, who runs that museum, I've got to know well over the last decade or so at the African American History and Culture Museum, which is a part of the Smithsonian. We gave $25 million to endow programs so that we could create a conversation outside our company. Because one of the notes I got from literally thousands of teammates after the killings was not only what are we going to do about it, how can we help, what can we do, but I wish people would have the conversations we have in our company outside the company. And so we try to help create a platform to do that. So that goes back on our long history of diversity inclusion, from our board to our management team, to how we measure diversity inclusion in the company and how people feel about it, to all the programs we run, the initiatives and the networks and the training and everything we do. But this was a moment of crisis that we had to step up and do what we do as part of our having sustainable, responsible growth, i.e. we have to share our success with communities, we have to be the best place for communities to work and do more as a company, and we did.
It's so interesting, I think, that you highlight this year, that you've been doing work along, and then the crisis of this year in particular, the killings you discussed, but also how the pandemic really showed the digital divide, a health divide. I mean, I think so much was amplified in this year, right? So we see a lot of businesses that are, I think, doing wonderful things. You just described some really amazing things that your bank is doing. The question we get sometimes is how does a business measure success on their D&I initiatives? You know, how do you know if it's working?
Well, as we think about it, and going back to the point on the healthcare, let's not. You mentioned, and I absolutely agree with you, and the company agrees with you. The impact that's on communities was also part of the issue that we came at with $1 billion program. So one of the parts of that program has been to donate PPE to community centers, because what we observed was, with some colleagues at the hospital systems around Charlotte, was giving away masks to these community centers and other areas really helped stop the spread of the disease, and the positive test outcomes at those places dropped precipitously when you made masks not an economic question for people. And so schools and others. So we gave away $5 million originally, really to the first responder type of thought process. Then we've now given away 10 to 12 million to other people to really help control the spread. So it just goes to show you how tangible and connected these elements are. When we talk about one of the great debates, I've been the head of the Diversity Inclusion Council of Bank of America since before I was CEO. And one of the great discussions is always, what is the business case for this? And the answer is pretty simple. If half of America is female and half of the world is female, you got to think that I'm going to serve 100% of the customer base, or I won't have my business. If 13 to 14% is African American, if 17% is Hispanic, and you can go through all the math, I have to have a ability to serve everybody, and I have to have a ability to get my talent from 100% of the population. I want no restriction on it. And then the question is, what inclusion means to us is when you come in the company, you can do all you can do based on what you want to do and your talents and your ability, no matter where you came from, what economic background, what race, what ethnicity, whatever. And so the goal is to have that kind of place. And we strive at it. We're not perfect. We always are improving, always working. We measure things, we work on them, we have initiatives. Each of the subgroups has initiatives. We measure D&I satisfaction of our teammates down to every group of 10 people or more, so we can see the scores all over the company. We can keep track of it. We measure people across time. But the reality is, and we always have work to do, and we know it. But the reality is, it comes from a spirit that you literally don't have to build the business case unless you believe you're going to get your business from half the market, or 87% of the market, or 83% of the market. You pick your numbers, or you only get your talent from that. That means you're just limiting your outcome possible. And therefore, it's completely aligned with the shareholders' interests. It's completely aligned with the return to the shareholders to drive these initiatives, because you can then get the best people and have the biggest and best client bases.
Well, that leads us right into another passion of yours, really about stakeholder capitalism, right? And so this idea of, is the shareholder interest in competition with all stakeholder interests? And how do you see, can you have both? Are they competing objectives, or can you have both?
Well, the great business writer, Jim Collins, wrote in one of his many books, but in the mid-90s, believe it or not, he wrote about a concept he called the genius of the and versus the tyranny of the or. The genius of the and is profits and purpose. The tyranny of the or is profits or purpose. You have to do both. If we don't deliver for our shareholders, we won't get permission to do all the work we do and how we do it. And so you have to do both. Now, what's been interesting is our research team, which is the top research team in the world, is voted by its clients for all but 1 year of the last, I don't know, 10 or something like that, which means it's a dynasty similar to the Patriots, to give people a sense here. That may not mean much to you, Suzanne, because you're in Washington, but up here it means something to us. But the reality is,
we have a football team with no name. I'm not going to say anymore.
The reality is that, this is a talented group of people. Their research over the last several years has shown that if you did not invest in the companies that had poor ESG scores, that scored poorly on environmental, social governance, and governance really is about diversity, inclusion, and how you approach those issues. If you didn't invest in them, you'd avoided 90% of bankruptcies. So that's a good answer for a portfolio manager to say, a person to say, if I can avoid that. And there's a moral right thing. So all that has aligned to come up to the idea that you got to be able to deliver both. And there's a lot of proof about companies that do well in this outperform, but you can get the debate going. The proof that companies who don't do well in this underperform or have a potential underperform, that has proven to be true, and it doesn't get much debate. So whichever way you want to come at it, you come back to the basic principles that people who do well here are going to have the client base, the employee base to be successful. And if you don't do well in these matters, you're not going to be there. And that led us to trying to define what that meant. And that's what we've been working on the last year. But we believe in the BR Business Roundtable changed their statement of corporate purpose. For 50 years, the World Economic Forum's been working on stakeholder capitalism. Klaus Schwab in 2015, the UN did the Sustainable Development Goals. In 2017, a bunch of companies signed on saying we drive our business consistent with those. So the corporate world has been after trying to get this done. And so while ESG can be considered to be a part of this, the reality is we have to run our companies to produce the genius, the end profits, and deliver for society, or else capitalism isn't doing all it can do.
I love that. I have a little bit of the tyranny of the and with a teenage daughter and all the things she wants, but we'll leave that discussion for another time. I wrote down the name of this white paper that you and your colleagues at the World Economic Forum International Business Council have released, Measuring Stakeholder Capitalism Towards Common Metrics and Consistent Reporting of Sustainable Value Creation. So this was created with the help of the 4 big accounting firms. Can you talk a little bit about the fundamental structure of these metrics? Are they new? Are they existing metrics? Talk about that a little bit. So
this came out of a discussion that started 3 or 4 years ago about long-term versus short-termism and long-termism, and the debate about, can companies do what's in the long-term? Are they forced to do the short-term through disclosures, through shareholder dynamics, et cetera? And then at the same time, you had the emerging ESG, the continuing to merge ESG principles. And so you put all that together, and what we got down to was you had lots of different people who were setting standards, but typically about one item or another item. And as we looked at it from a company's perspective, from these 140 odd large companies in that group, we didn't try to define a new set of metrics. We actually asked the big 4 accounting firms to go out there and find the metrics produced by GRI or SASB or TS and put them all on a piece of paper and find out what straightforward number of them would match the SDGs. And if a company did that and disclosed what they're doing, all the constituencies, all the stakeholders could look at that company and say they're making progress on their environmental, on their social, and so there's people, prosperity, planet, and governance. And so the diversity of your board, the diversity of your teammates, your pay for performance, pay for gender pay equity, those types of things are disclosed, as well as your environmental scope 1, scope 2, 3 standards. So there's 21 metrics across the SDGs, the Sustainable Development Goals, that meet all those goals, that are, think of it as a convergence of all these metrics out there. And there's 24 supplemental metrics behind it and many other metrics you could disclose. But the idea is to get companies to sign up to disclose these metrics so that they can be measured by portfolio managers, by us as a lender to those companies, as investors, as individual investors through our Merrill Lynch platform, buying stocks in those companies. Everybody could see the same transparency. And that would then cause convergence in the industry to a set of metrics which people can measure. So that energy would go away from the metrics and debate about which metrics are perfect metrics towards a set of metrics which we can make progress. That was the magic of the big 4 accounting firms, and they did great work here. And they found metrics that they could convince CFOs you could put on a piece of paper and do, as opposed to here's another set of metrics, and we're all addressing all these as leaders in business. So it's convergence, it's clarity, and it's simplicity. And the simplicity then would translate for people to be able to look at them and measure them. And that's the key. Because once you get the momentum going on this, ultimately these will be housed by in the old days, GAAP came out, and you had a FASB. You'll have, and that's what SASB. You'll push all this together, and hope you end up with a set of standards adopted by Europe, Asia, and America that are simple and straightforward. So the corporate world is pushing us to get convergence and simplicity and straightforwardness. We're asking all these companies to sign on these metrics, and then over time, it'll end up being a more official confluence.
I'm taking notes as you're talking. All right, let me switch the topic here because I'm keeping an eye on the clock. I'm sorry.
Suzanne, just one thing before. Why did we do it? And that's the other thing that you have to remember is capitalism gets criticized as being amoral by some people. It gets criticized by, having gotten away from its bearing, by being only shareholder focused. If the world said we want to have sustainable development, 190 odd countries signed on to the SDGs saying this is what we define as sustainable development, and these metrics match a company up to say, if I'm making progress on that, that aligns capitalism to actually solving the big problems that are embedded in the SDGs. And without our entire expense base and our entire balance sheet aligned to it, the great work that Anne Finucane and her team's doing, our charitable work and stuff, is spectacular. The $1 billion program is spectacular. But through our annual purchasing, we do billions of dollars of purchasing for women and minority-owned businesses. That is a sustainable method of doing it as opposed to one grant. So we got to do both through our core lending. And so the idea is to align all of capitalism more closely with what the world wants from it. So then you end up with a debate about is capitalism good or bad? Is no, the debate about capitalism is the only thing to solve the problems because it has innovation, it has size, it has money. And it takes $6 trillion a year, and you can take all the charity in the world, it doesn't put a dent in this. What has to happen is aligning an entire capitalist system to solve these problems. And it can, because it has the money and innovation, ingenuity. And if you put the profit motive on top of it, it works. And that's what we're trying to do. So sorry to cut you off, but I was just trying to make sure people got that linkage.
No, I'm really glad that you did, because it's kind of what I said in the opening of Jim's question of what did I really see this year, right? And what I saw was businesses being called on to really solve big problems in society, right? As a purpose, and I think you're right. That's where innovation happens and smarts happen and opportunity happens, but it's aligned with profit and business goals, not in a CSR department somewhere. So no, I'm really glad you said it.
If you want to make progress on economic mobility, which is the heart of what you want to make sure people can move to the best job they can have and compete in the context of United States citizens and with the rest of the world for the best jobs in the world that can pay the most and provide the greatest quality of life, that economic mobility has to be supplied by business because we have the jobs at the end of it. So you need to say, what jobs do we have and what jobs do we need and what jobs do we need in the future and how do we train? Then we say, what skills do we need to do it? And then you go to the programs. If you start with the programs, what happens is it doesn't have the answer is we have jobs. And so working with CEOs around the country and at different places, that's the need and that's how we bring a lot of energy to this is we have the jobs at the end of the question, which is the kids coming out of the high school that we can give 5 sets of more skills and they can start for us for $20 an hour. We start at $40,000 a year plus full benefits. And so if you can, and we employ, this year we'll hire 20,000 people probably. And so, if we can get people in those jobs, it's a career-oriented job. So we said we'd hire 10,000 people from low and moderate income neighborhoods into our career pathing and our consumer business, and we completed it in 3 years. We said we do it in 5. That's a great outcome, but it comes from business saying, I have the jobs, develop these skills, and then people have a career path. That's how business solves these problems of mobility, not just funding programs, because the programs are terrific and they're wonderful, but at the end of the day, they got to have an outcome, and the outcome is the job and the opportunity for a career.
Couldn't agree more. I couldn't agree more. I think one of the things I've been the most proud of at the U.S. Chamber is work we've done with the Gates Foundation to create talent pipeline academies in 26 states. We can really take employers and then into the educational supply, whether that's a community college or a vo-tech or a high school or a traditional university, and say, these are the types of people we can hire if this is what this looks like. And just connecting them in conversation has led to so much. Okay, so we have a question from the audience here. Bank of America has provided more digital services for people who are blind than any other major bank. What has driven this marvelous aspect of inclusion? As a blind member of the Boston Chamber's board, I benefit every day from the years of work that Bank of America management has done to make every aspect of banking accessible to me. Thank you.
Well, thank you for being a client. And This is where the diversity inclusion efforts and the business efforts coalesce. So one of the things we've done for years is use our disability affinity group, which I chaired in the old Fleet Boston context 20 years ago plus. And then we brought that into Bank of America actually, because it didn't exist, and we built it out and increased it. But we use that group to test things, and one of the things they do is press us and test us on issues like access for people who have sight issues or hearing issues, et cetera, or accessibility issues. So ADA is one thing, but the question is, what does it really feel like to go through that? For a person working in our company with a sight impairment of any issue, they were advocates of getting the JAWS programs, which allow them to be computer developers or work on systems. And so it's interesting, and thank you to the customer, but we are challenged by those groups about what are we doing for their particular affinity, their affinity groups. That was what they do. And it's wonderful because they press us in a volunteer army. We don't create these organizations. They spontaneously create themselves. We make sure they get a little funding and get some energy and go. And they've been great at pressing us. And so I'm glad your board member understands the value of those capabilities for him. But it comes from a long history of believing it's the right thing to do, but also being pressed by your teammates to say we have to be accessible, not what's required by the letter of the law, but way beyond.
The listening is so important, right? Getting the right people in the room and then actually listening to them. You have another question from the audience here. How can the business community be a racial equity champion in this new era of transparency and social impact?
Well, I think one is how we run our company. So the diversity of our board. So we have a diverse board. We have representations from Black and Hispanic and male, female, and you have to have a diverse board. You have to have a diverse management team. You have to measure diversity all the way through your organization, because the jobs in our company are great jobs. And so if we get a percentage representation across from the top of the house to the starting job that represents society, we are creating great opportunity for people, and that's what we strive to do, and that's how we measure diversity, the actual diversity representation statistics. The second then is how do you operate with your day-to-day operations. So in the standard programs, in terms of our low and moderate income lending, which helps create wealth for families by getting them into housing and stuff, we do $5 billion a year of that. We have many programs in terms of helping people go from a no card to secure card to unsecured card, so building a credit history for them. And that's economic mobility. And so you're trying to create mobility for everybody, and you're trying to then create it through special programs and also regular way activities. And so leave aside ethnicity or race, this is just how you run the business, and then everybody benefits by it. And then we have the programs we have, like the Pathways program. 10,000 people come from low and moderate income neighborhoods coming into our business. And then we have the programs that we work on our $1 billion program, which we did so far. One of the core issues in America was in financial services was the minority depository institutions. And so a lot of people talked about how do we help them, and I said, well, they need equity. So we said we need equity. So the team went to work on it. We're now invested in probably 13 or 14 of them. We own 5% of common equity. For everybody we've asked that want to take it, we put the money in, and that gives them capital to grow. And then you go to we just announced in the last couple of weeks 25 grants to HBCUs and community colleges, which are not HBCUs by designation, but have a historical representation. And again, driving for the HBCUs, the job development side of their house. Their kids in 4-year colleges, they already are way up there. The question is, can you help them get exposed to employers they wouldn't otherwise been exposed to, and help them build their career readiness and things like that. And then so we did that. And so we announced we're going to put $200 million in equity into companies in local markets, either through small funds or through direct, probably through local funds we're building up, that will be small, what the private equity business calls chip sizes, $200,000, $300,000 investments, with a view that we've got to help create wealth for the regular way companies, not the biotech ones that everybody's running after, but these are the regular way distribution companies or other types of operating companies that need $200,000 equity so we can lend to them. And then in our lending, we're the biggest small business lender in the country. And well, the world doesn't publish the same statistics. That you should rest assured that that it's very representative of society when you have $30 billion of small business loans out there and have 10 million small business customers on a given day, that you're very representative of everyone out there. So we do a good job there. And then our purchasing, as I said earlier. So you just every aspect how you have it, from what the opportunities you hire for people coming into your company, the opportunities you create for other companies to find people to come into their company, and then how you train and education process, the types of things you're talking about. We work with a lot of communities, and then how you support specialized programs that help give people an extra step here, an extra step there, and it's all that. And it's the next big frontier is going to be social determinants of health, which is a big issue that our awareness and everybody's awareness is raised out of this crisis. And how do we work on the healthcare side of this for mobility and things like that. So all these are programs which we just have to keep driving and stick to. But it's how you think about all your operations from top to bottom. The mobility you create in your company and the mobility you create in your clients for their employees and stuff like that.
I think that was a great answer and so full. And the only thing I would underline is no matter how small your business is, you can provide help to people local. I know in Washington, there's a group called Urban Alliance that really helps with high school internships. I think your point about the HBCUs is so important. Wayne Frederick, the president of Howard University, is on the U.S. Chamber Board. And one of his things is, look, one of the things that's worked are the HBCUs. 80% of Black judges went to an HBCU, a huge percentage of the lawyers and doctors, and yet they're chronically underendowed. And so if you're a small business and you're looking for a way to be helpful in this moment, I think look to the HBCUs, look to internship programs. There's things even individuals can do. You don't have to be Bank of America size, to do something impactful here. Okay, so I think the audience would never let me come to Boston again, even virtually, if I didn't turn to the economy for just a minute. So how are you feeling about 2021? How are your economists feeling about 2021? And does the announcement of the vaccine development impact your outlook?
I think let's focus on the U.S. economy, just because that'll be the easiest for people to kind of live with. So we had a economy coming into 20 that was actually growing faster than people thought. What we saw in our consumer spending and our behavior was actually faster than what the statistics were showing. Then you had the crisis come, so you ended up -5, -30%, then +30%, which what does that mean? That you basically went down and came back up to about 95% of the way there. Our economists all during the year pulled in the duration of this, right? In other words, they thought this would be longer, and they kept pulling it in. So when would the economy be the same size it was before the pandemic crisis? In the future, move from the end of 22 to the beginning of 22, and it's kind of sitting around that time frame. And so we have an economy today which is about the size it was in middle of 2018. We didn't feel too badly as a country then. So the question is, where does it grow? Underneath it is still one of the basic problems. It's still probably a 1 to 2% of growth economy. So as the economy gets recovered up and gets bigger, the growth rate's going to slow down, and that will cause everybody to worry. But that's, of course it is, because it's the largest economy in the world, and as it gets back to normal, the growth rates will slow down. So what we have for next year is plus 4.5%. This year we think it ends minus 3.5% or so. So you're seeing that turn come in, and then it takes till the end of next year to the beginning of 22 to where it crosses over in the same size. Importantly in that is probably not an assumption a vaccine is successful in 21, not because it's not successful, the science is that the distribution process just takes time. But in anything that speeds up, and that's what you've seen is some of the enthusiasm, that speeds up, people are pulling in that crossover date. Because at the end of the day, if you look down the unemployment, which is a serious problem for us to solve in the country, it's now below 7%. But if you look within it, the real sort of work hole left, in other words, the people to put back to work, are the people who work in industries, are outsized relative to the people who work in industries that require people to be physically present to make work. The hotel industry, airline industry, cruise ship industry, movie theaters, sporting events, and restaurants and all that. And so I think, our view is that we should have a stimulus aimed to help those people continue to get across the bridge to the other side of the river. But a large part of the economy across the bridge. dentists are open, and they're not being shut down as this new wave comes in, which is people understanding that this is the treatment pattern of the virus and the control how to transmit, even though it's transmitting way too fast right now, we need to slow it down. The reality is they understand, so they know a dentist can probably perform a cleaning on you without infecting you. That was different. The first time everything just stopped cold. So I think we're back. So we have it growing next year, 4% plus. We have it largely recovered at 95%. Takes to early 22 to recover. The big question is, can we get the leverage out of the vaccine to create, effectively herd immunity through vaccination during 21? That as you get to this time in 21, you'll see the normalization of those activities that are just held back. It's just reality. And then the key is to have, in my mind, it would be to have a stimulus aimed at helping that last 9 months, 12 months, whatever it will be, 15 months, help that group of people through the 15 months. That is a good policy, and that will actually mean the economy is more ready to come out the other side when it's done.
When we can all go to concerts and baseball games again. So building on that, and I want to build on, this is partially an audience question and partially a Suzanne question. The audience question is, what new skills do you believe employers will be looking for post-COVID? The question I was going to ask is kind of, I heard what you just said about when we're kind of back to normal, but what do you think changes in the new normal? Are some of this work from home, the virtual work, telehealth, telelearning, what do you imagine sticks around even when we're back when we're on the other side of this? And does that impact this audience question about what are the skills that employers are really going to be looking for when we get to the other side?
The answer is all the above changes, right? And so it has changed and it will change. But the underlying, what's driving the change in businesses overall has been technology and various factors, whether it's voice recognition, whether it's networks. Think about what's going on in this network system right now that 5 years ago would have been unthinkable to think I'm at home and I'm talking to you and you're at home, you're in Washington, we're got all these people on, it's all working. It's pretty amazing. And the ability to transmit across those networks, so that's important. Local computational capabilities, artificial intelligence and data, pulling all that data together and being able to store it and distribute for business to analyze. These are massive trends that have been going on. So what this crisis did is accelerate them. It's that straightforward. It basically moved us further along the domain. So what's a specific example? In the third quarter, we had 2.5 billion digital interfaces in the third quarter of 2020. Today at Bank of America, it's not some future thing. 2.5 billion interfaces. And if you looked at some of the activity, you saw people who, for the first time, deposited checks through mobile check deposits in the second quarter, the third quarter, by necessity. And once they've done it, they realize, my God, I could have been doing this. Even if they went to the ATM to do it, you're saying it's much simpler. So you're moving people along a usage pattern. People bought a car and financed it online. People did a mortgage completely digitally. So yet on the other hand, we'll have 400,000 people going to branches over the next 24 hours. So people still are coming in, but the nature of that's changing. And so that all businesses are going through that. The way you buy your goods and services at home has changed. The way you get money out of the ATM, we have numbers of ATM withdrawals are lower, but the dollar amount's basically flat to up. Now, how could that be possible? People are taking more out because they don't want to go 4 times. So, and so there's this stuff that's changed, the behavior's changed, and what this did is probably accelerated the trends that were going up a line, and it has jumped them. The question is, do they keep going on that jump, or do they flatten, they go back and they're normalized, and we'll see that play out. Now, that's sort of the fundamentals. So the skills you need are, the skills we need tons of data scientists and they're not data scientists in that the PhD in data science. These are people who can get data organized and keep it done and do a lot of different work. So it's a broad base of work we need. We need people who can code like son of a guns, and that's a skill that's in demand. Going back to our questions about how you develop mobility, we need people who can handle the ability to answer customer questions, which are much more complex. That's why 10 years ago, a call center job was I need to change my address, and now it's I've got these payments that I've messed up, and what does this all mean, and fraud claims, and this. So it's much more complex. So that requires a different set of skills, and so I think the skills we need are going to be around data, around computational capability, around understanding how to access and manipulate data. Those are the skills we need, but there'll still be a base of skills to manufacture all that stuff, the base of skills to make it all, to service all that stuff, and so there's a lot that goes on. the big one I thought, most people ask about is, work from home. Is anybody going to go back to work? And I'd say everything we're judging without an answer, which could change people's minds, and we'll find out, which is if I'm safe. If I knew I couldn't get infected on an airplane, would I get on an airplane? Well, after 9/11, people wouldn't get on planes for a while because they didn't think they were safe till the TSA got set up and you knew people going through weren't going to have the issue. Then people started flying, and so once people believe that they can be safe going to the sporting event and stuff, that'll change very quickly the behavior, and I think it'll change the behavior of people wanting to come to our central offices. What has changed is maybe their attitude about maybe I'll work in northern New Jersey as opposed to Manhattan, and I can do my job. Where we used to try to convince them to do that, and sometimes it was like we're sending this, to outer Mongolia or something like that, and you're saying, no, I'm just sending you, 20 minutes across the river. But that mentality may change because they appreciate and like the non-commute aspect of it, and so we may see our people spread, but somewhere in New York, those people will work. And we believe from a cultural standpoint, from their interaction standpoint, once schools are open and your kids are going to be in school consistently, that changes your the demands on a person's time and things. I think it's just premature to judge the endpoint of that. Now, will it change people's attitudes? 110%, because they've got an experience that they didn't have for their whole working career. They got on the T and went into downtown Boston. They got on the trains in New York, went into New York. They got in BART and went into Safety. That's changed now. And now they said, oh, this isn't so bad. So how that plays out, we'll see. But I think it's premature to judge it as a permanent change. The customer behavior is already permanently changing. It just may have moved people along the paradigm. And that's a far more interesting question in my mind, is how far did it move people? Will they revert back? Will they just keep going?
It's so interesting. We're watching an older generation who thought work from home was code for, I have to wait for the electrician, but I don't want to take a day off. Say, wait a minute, I'm working more than I've ever worked when on home and in this way. And so I actually am quite productive. And yet you're seeing a younger generation who was always, I could work from home, I could do it all, say, I miss the collaboration in the community. So you wonder if the trends come together in some way that will be interesting. So speaking of that, we get back to a new kind of normal. We feel safe going back to school and to offices. How do you think businesses and people should be preparing for that day? I mean, what should we be thinking about now in terms of going back to a new normal?
Well, I think there's two elements to it. The paramount element is employee safety. And so then the question is, how can you bring people back safe, absent vaccine being readily available? So we're in this phase. I early on in mid-March or early April, I wrote down my thoughts just because I had to write them down about the phases, and I call this phase 3, whether that's the right word for it or not. But this was the phase where the treatment regimen's better understood. The hospitalization rates is the society can deal with, even though they're up. They can fathom how they can actually take care of the people and things. And so you're in this mode now, which is completely different when a vaccine is readily available. When a vaccine is readily available, I think then how you deal with this is different because the people want to be safe. The question is going to come down to the vaccine status of the people coming in and what happens and how you do that. We're still some period of time away from it. So right now it's all about, if you start with employee safety, which we do and everybody I assume does, the question is, can people come back safely? And then do people want to come back? And that's so we brought people back all over the world. And then we slowed it down now that the resurgence virus, we slowed down some places. We were told to slow it down. Our people are essential. They could be all in the office if we wanted them. It's just harder to keep track of. So we brought people back. We will do it safely. We're testing, I think, for now till whenever. The testing, what some of the colleges have proven to us, is a strong testing regime and the ability to have effectively a semi-bubble around it. Allows you to at least identify early people are asymptomatic. So I think the thought you should be thinking about a testing regime, about, is your physical plant ready? Your willingness to mandate the requirement that people wear masks all day long to work, and can they wear them and things like that, because those are real practical questions to get into. Can your physical plant allow those people into the building? We've worked a little harder on places we own the building and own the parking lots and own everything, so we can sort of figure out how to configure this. We're 2 floors in a 20-floor office building someplace. Can people get up the elevators? We'll take a 45 minutes. So there's these practical issues I think we've got to think through in this time period between now and a vaccine. But after a vaccine, if science has been unbelievable and the people have done a great job, and once we can get it distributed to where it provides really immunity for substantial numbers of people, then I think it's back. It's potentially back to normal. Then it's going to be a decision based on the types of things you were talking about. Do we want the people really want to work in the office, or have they rethought that? Right now, there's no decision allows you to do that. There's no way that we could bring all the people working our Boston building back tomorrow. There's no decision we could do it in San Francisco and New York. So all we're doing is saying, what pieces can we bring back carefully that really need to be back and could do a better job? Right now, we've operated for 9 months, on a very strong basis. With a great work of the team. We deployed 100,000 computers in 4 weeks. We deployed tons of screens. We deployed 30,000 or 20,000 my Wi-Fi devices in India literally overnight. I mean, we've done some unbelievable things that Kathy Besant and her technology team have pulled off. They've just been incredible. That's not the way you want to run in perpetuity. So we have to get back to more of a normal environment at some point. But the question is, what I be thinking about as employers, what's the risk? Am I following best practices? How do I know those? How am I informed? And then how do I do it? And then, by the way, what are my teammates going to think? If you say come back and they don't come back, you're in a state. So the question is, you got to kind of let it work a little bit now. And that's what's kind of going on in the company, is that people letting it work. They know they got to get back to normalcy, but they're letting it work now just to see. And this new wave kind of put everybody back a little bit to say, wait, let's just wait this out now.
It was so interesting what you said about working from home on a dime like that, 100,000 computers, et cetera. The chairman of our executive committee is the chairman of Allstate. And he talks about, if you had been wargaming this and making a plan, okay, what if the pandemic hit and everybody had to work from home? The amount of time we would have thought it would take to get started versus somewhere around March 13th, a light switch happened and no one's really been back since. The speed was remarkable. I think also right there in the Boston area, the Harvard Healthy Buildings program is really remarkable. And they've given us some great advice on even low dollar filtering systems that even small businesses can do to make a difference, to be ready to clean their air when they come back. And so that Healthy Buildings program at Harvard is, I think, really been helpful and interesting about preparations. So I think I'm supposed to turn it back over to Jim, even though I don't really want to, because I have 1,000 more questions to ask you. But I've learned a lot just sitting here, and I really appreciate the opportunity to have this conversation. Brian, thank you.
Well, thank you, Suzanne. And I'd say the people on the Zoom call here, go out and do something, hire somebody, invest some money. We all have an obligation, going to your earlier point, if we can help move the economy forward, provide more jobs, provide a bigger pie, to provide the government the revenue to do the things they need to do. But it all comes down to all of us in our individual capacities, starting to get back to normal and starting to try to do things. Some businesses are not able to do that because of rules and regulations, but a lot of us can do it. So we got to keep pushing forward.
Amen.
Hey, I'm going to take the last few minutes to maybe throw a question for both of you out there. You both advocated for a stimulus package. I'd like to dig a little deeper into what you might think is the elements and scope of that. We talked about, I did a media interview today about a report that says that 37% of Massachusetts small businesses have closed, which is a number that mimics, I know, the rest of the country. Unemployment numbers, state budgets. What should be in a stimulus package? And maybe, Brian, you could share your thoughts on how big should it be? We've heard 500 billion, 2 trillion. You get concerned about the national debt in terms of these stimulus packages that have come out and what might happen going forward?
The issues of the size of national debt are not new. We just have added a lot to them. This pandemic has added another lot to them. And the issues of potential inflation risk around that, that's real, but just not the time to be distracted by that. We have to solve this problem to get the economy back to the size it was, get the unemployment back down. It's a human question. And are you willing to borrow from the future to take care of the human question, which is to get a vaccine, to take care of the people who've been fundamentally impacted by this through no fault of their own, and get them to the other side of the river, in my analogy. I think that's the critical question. So, and so then if you look about that, you basically then lead you to a stimulus program, which, I'm not sure it has to be as big as some people say. I think it has to be bigger than the lowest numbers. But there was rumors of deals in ranges that are good. And by the way, there's hundreds of billions of dollars weren't spent from the last stimulus. So the question is where you're going to apply the money to. So in PPP alone, there's 100-some billion that never got used. So you could, if you could figure out a way to activate that again, it would take some authorization to do it. You got 100 before you actually take another dollar to the deficit, because that's already planned to have been spent. So I think it's basically unemployment supplements to allow people to maintain a standard of living and allow them to keep going so they're ready to be employed on the other side of this. I think it's another round of PPP geared to more precisely geared to the companies that are really still not open. To your point, Jim, earlier, you don't need to give it to people up and operating, doing fine, especially if it's going to be a grant program. I think so. It's the people side is the unemployment. The PPP side helps us, the small businesses that are closed, restaurants, et cetera, that are closed because they can't get open. And then I think for the state, then I think for universities and nonprofits, I think you have to think about that, because if we want these great performance nonprofits to be there on the other side of this, we have to help, basically cover up the deficit for them. There's no other way to do it. A lot of them adapted their models and are getting some of the revenues, but if they are still struggling to make money, if we want, the symphony orchestra to be in the same condition it was, or the museums and places, and I'm talking about just across the whole country, some are in great endowments, and many others don't. So you got to, sort it out. I think that's it. That also applies to universities, and colleges and stuff. If we want them there, we should nationalize that deficit. And then on the states, I think to the extent people spent money that was not planned for these purposes, I think they should get some help. I'm not a big believer that this should be used to cover up other fiscal issues, which Charlie and the team in Massachusetts have done a great job of managing. But I think that there are lots of expenditures, and by the way, a lot of that hasn't been spent yet either. They just might need to relax the ways people can authorize it. So I think it's a pretty straightforward program around the people are most affected, the companies are most affected, and industries are most affected, and then even some larger companies in those industries. And then states and nonprofits around those are states sort of filling up the hole caused by this that they otherwise not would have spent. And then really on the nonprofits, sort of same thing. And I think if you do that, I think you could, with any number that's been talked about, I think there's enough money to get a long way there. And then, by the way, if it's not enough, we should come back and do it again. I think the debate about what it could be is not, it's not the right debate. The debate is to get the money flowing to keep the economy running.
Right. Suzanne, closing?
No, I mean, amen to all of that. Ditto. Two things I think I would emphasize are childcare facilities. We continue to hear a lot about closed childcare facilities for people who need to get back at work. They need those facilities opened. And we would also like to see some very limited, very targeted liability protection. We continue to hear from small businesses that are worried that we're in this time with no playbook. If they're doing the best that they can with the information they have at the time, they want to make sure that they aren't getting rid of one risk of staying closed only to get the other and be sued. So the other thing I'd say is look at the Problem Solvers Caucus. They had a pretty good compromise starting point, and maybe with these thinner margins, that's a place we might get to.
Well, thank you both. I could listen all night, so thank you for a great conversation, Suzanne Clark, Brian Moynihan. Just thank you so much. I took a page full of notes as well. Profit and purpose, aligning capitalism more closely with what the world wants to solve problems. I think that working with you both over the years, I know that that's what you wake up doing every day. So thank you for doing that. Thank you for sharing your thoughts and your time today. And to our audience, thank you for joining us, and have a great holiday season. Good night.
Thank you.
Thank you.
Good night.
Bye-bye.